Welcome to TradeTheMBI.com. This is John. This report is for the 13th. And Friday the 13th, and we're looking at the daily setup here where we've just begun to see the shakeout dip. Any further erosion here at this point would move the shakeout to a negative area, which would indicate that we might see a little bit more of a downdraft from where we've been. The other day we had a brief move back down to the yellow ABM, and it came right back up, but you can see the strong move of shorts activating into this setup. As long as the orange, though, here doesn't reset, could be problematic for a major rise. You notice that usually you get this dip right down here below each and every major upturn. When you get DOC spread that sometimes has the orange elevated, it's modest to nothing. So wouldn't look for any major spark. That doesn't mean that we're not going to still move back and forth within this upper level here. I don't think it's an indication that we're going to look at anything strong from a retrace standpoint, but we should always be prepared, and that's the important part about it. It's like you want to have a clear idea. Clearly, when we look, though, at the NASDAQ, you're not seeing anywhere near the same bearish tone, and the Dow has been in that reset mode for, well over a week now, and but we're seeing a nice reset, though, of the DOC right here, the D Omega converted, where we have the red trailing lower in that. So from that standpoint, we're taking out the overbought that existed from this move. You're not going to see that kind of reset from most other indicators. It's just letting us know that there's plenty of liquidity still going into the market at this particular point. The euro strength is certainly going to help as well. They've been able to maintain that now a little bit higher even. So not bad from a bond standpoint. We saw the uptick there and still moving a little bit higher. It's kind of interesting to see that given the potential for more rate increase, but nothing's going to happen in the short term here, so not terribly poignant. We had the dip below the ABM green line, retrace right back to it. Little dots represent, we can put them right there, extreme fractals, which is usually a little short-term buy pop. So oil maintaining itself right in that perfect zone, and that is also going to be somewhat bullish. Though we can see that gold finally getting a little bit of overbought in this nice little uptick that it's taken from the lows we had from 109 conversion. So it's been a pretty decent return from that expectation. Let me shrink the 5K here just a little bit. So we had the signal coming down, and this is part of the changes I'm adjusting into the shakeout. Typically what we look for is the reset below that 13.5, which is typically the buy above level, or at least an accumulation level from the market after a downturn. And I look for the magenta rising above that level, but you got to have the shakeout going in the right direction. So the first point of that histogram right here with above the negative 13.5 was right at this point. Not coincidentally, you get yellow buy, number 2 buy. We also had an excellent reading from the extreme histogram that wasn't overbought, and that was the point we put that chart up on the Skype chat and said, that's your long opportunity. And let's see where that value was, right there at 22.52. So that was a nice, well over 13-point gain. So very effective and not too bad. We would see here that the first declining of the brown was an indication that we might begin to start seeing a short. But anytime you're still above that 13.5 with, on the plus side, the plus 15 here, the yellow line, you got to see the magenta and that move below it before there's any suggestion that you're going to see a significant decline within that. And then you would also need to see the cyan above the red, which just did right over there just a little bit, but beautiful support right off that ABM green, and it's held up decent. But a little bit of warning signs, and we could see that during the whole day for that move back up, overbought with the positive extremes. So where we had just a couple of oversolds, now you can clearly see that we're probably going to fill back into some of those, and that can go all the way back to the bottom point right back there where it first began. So that's kind of what the market's been doing. If you look at the daily, we can see that it's just been straight across from that standpoint. No real variation whatsoever on it. So all in all, I still think that there's probably some trepidation, just waiting. Still didn't hear, like in the press conference or anything, about the stimulus and that, and I think they're starting to wait to see if there's any real action from Congress on some of these topics before the 20th, and after that, then they're going to be looking for the dramatic changes, because Trump has been clear that he's not going to play his hand before he actually takes office. So market's sort of in a pause, kind of an anticipation mode of what may take place after that happens. So we just have to hold on and let that develop, and we'll keep following the indicators. Right now, we just have to be prepared for any little weakness. Still isn't bad here. I mean, this is a complete reset. Shakeout's still positive. I mean, we can still see that shakeout start to climb, and that could actually bring us back up to the peak levels anyway. So I would say it's just kind of a mixed, muddled sort of sideways action at this particular point. So take what you can get, and we go from there. As always, look for me on the Skype chat, and stay away from those black cats and ladders on this Friday the 13th. As always, trade well. We'll talk again later.